Hey everyone, it's Henry, and I've got a list of stocks that I researched that I want to share today that are going to make you money in December. I'm not a financial advisor, but I worked for Goldman Sachs and have nearly a decade of investing experience and have beat the market for a number of years after my first 3 years. Now it's Cyber Monday, so for the next 24 hours, the team and I made the option course 70% off. This will be the only purchase that will make you more money than you spend. It's a Black Friday continued sale to the email list, so I have 2 links for you guys. One for the course and one to join the email list for future deals. Now, let's not waste any time and jump into the first stock. Unity Software, ticker symbol U. Unity is worth just $50 billion in market cap. The company beat earnings 4 quarters in a row. In the last 12 months, just passed $1 billion in revenue. Unity Software operates a real-time 3D development platform. Its platform provides software solutions to create, run, and monetize interactive, real-time 2D and 3D content for mobile phones, tablets, PCs, consoles, and augmented and virtual reality devices. That's where my interest really peaked in the stock. Given the recent hype in the metaverse, after Mark Zuckerberg's presentation, I believe there's going to be continued strong interest in stocks that will be part of this emerging trend. The ability to play games, meet with friends and family, buy goods, and simulate products all in the digital realm, that could be a game changer, especially with many companies investing resources. It's smart to get in on companies that will fuel the growth or be in adjacent profit pool industries. That's where Unity Software comes in. The company provides the most widely used game engine in the video game industry, allowing developers to design and customize how players interact in the games. Its use is so dominant, in fact, that 94 of the largest 100 gaming studios use Unity's platform to create their games. Unity's platform is also great at creating and operating interactive real-time 3D content. Architects, automotive designers, filmmakers, and more use Unity's tools to make their creations come to life. Now, whether this is a play on creators, which there is a growing number of YouTubers, or if it's a play on the metaverse, or both, I'm happy to own a growing industry. The platform's high performance and easy to use software helps designers breathe life into their visions. So when it comes to making a virtual world a reality, Unity provides everything developers and creators need to build it. While a single metaverse is the ultimate goal, in the short term, it will likely be a number of smaller virtual realms, each created to close the gap between businesses and consumers. Unity plans to support and shape the metaverse and will emphasize content creation, cross-platform access, and narrowing the distance and reducing the friction between creators and consumers. This was all said again by the CEO, John Riccitiello. If Unity becomes a big part of the metaverse, then it could see its value increase by 10x. To further enhance its offerings, Unity Software announced plans to acquire Weta Digital, which will put award-winning visual effects tools and technology into hands of millions of creators and artists. Weta tools build characters and scenes from the world's most iconic films such as Avatar, Lord of the Rings, and Wonder Woman, just to name a few. While investors are waiting for the metaverse to come to fruition, it helps to have a company that's already firing on all cylinders, and Unity Software definitely qualifies. In the third quarter, the company's revenue of $286 million grew 43% year over year, fueled by a 34% from its Create Solutions segment and a 54% increase from the Operating Solutions segment. At the same time, Unity cut its loss per share by half. For those concerned about the company's lack of profitability, consider this. During the quarter, it generated free cash flow of $34.2 million, up more than threefold compared to $10.9 million it delivered this time last year. Unity's customer metrics are robust as well. During the trailing 12-month period, the company had 973 customers that generated more than $100,000, up 32%. The metaverse is coming and it's already attracting a lot of attention. Many of the key technologies are already in place and Unity is uniquely positioned to stake a claim, so this is a stock that I have on my buy list in December. Now, the next stock that I have is Upstart, ticker symbol UPST. While Upstart is 1/3 of the market cap of Unity, the company still has an amazing potential to 10x from today's prices. In fact, mathematically speaking, it's easier for a small company to grow in relation to the market opportunity fast. For decades, we have used the FICO score, a metric created by Fair Isaac Corp, to determine credit worthiness despite its many flaws. For example, consumers who do not use credit or have made one minor error in their past past could have their credit score wrecked and could be denied good credit. So not using credit because you don't need it could actually hurt you, which doesn't make a lot of sense. Upstart realized that the FICO score is not a fully accurate representation of creditworthiness, so the company is using artificial intelligence to create new ways to do this. The company's determination does come from factors like employment, income to debt ratio, and other traditional metrics, but these are in addition to thousands of other non-traditional factors like education or loan application interaction. This innovative way of rethinking credit has resulted in rapid adoption from many banks and credit unions. The company has tripled its customer count from 10 1 year ago to 31 in Q3. Despite being a $17 billion company, it's growing revenue at a staggering rate of over 250% year over year, reaching $228 million in Q3. What is even better is that the company is profitable. Upstart earned a net income of $29 million, which grew 200% year over year. Upstart is seeing success in disrupting a major financial cornerstone, so it's understandable that the company will be valued highly. Upstart currently trades at 28 times sales and 238 times earnings. However, I will encourage you to look more at price to sales when you see a fast-growing company rather than the price to earnings ratio. While these are high, Upstart shares have fallen nearly 50% off their all-time high, so this is a nice discount to the 60 times sales and 600 times price to earnings ratio that the stock was trading in late September. I see this as a unique opportunity to purchase a high-growth stock that is disrupting the banking industry, which after working in for such a long time, I dislike, and I see it as a complete dinosaur. So I'm not surprised to see Upstart crushing it. The FICO score is inaccurate and inefficient for many Americans, and Upstart is trying to make getting a loan easier for those people. The company has began to see widespread success, but with an addressable market of over $5 trillion, the company is very early in its journey. If Upstart can continue refining its AI system to maintain its accuracy while obtaining more customers across the country, the company could continue to explode over the next decade, providing stock returns of 1,000% or more. All right, so the third stock that I have, I was wrong about. I have to admit, I thought it was expensive and it wouldn't continue to rise, but I may just have to swallow my pride and admit that NVDA is a great business, and despite not trading at a cheap valuation, has all the right moving pieces to be a $1 trillion company. I had expected NVIDIA gaming and data center GPU businesses, which both experienced strong growth during the pandemic, to lose their momentum as the pandemic passes and people start playing fewer video games and data centers face less pressure to upgrade their AI processing servers. But that slowdown never really happened. NVIDIA's revenue rose 53% to $16.7 billion in fiscal year 2021, which ended back in January. The growth was led by its gaming and data center businesses, which easily offset the slower growth of its auto, professional visualization, and OEM businesses. Its adjusted gross margin expanded 310 basis points to 65.6%, while its adjusted net income surged 75% to $6.3 billion. In the first 9 months of fiscal 2022, NVIDIA's revenue grew 65% year over year to $19.3 billion. Its gaming and data center businesses continue to grow, while its auto, professional visualization, and OEM segments all recovered as the pandemic-related headwinds waned. Its data center business also benefited from its takeover of the data center networking equipment maker Mellanox last April. Its adjusted gross margin rose 90 basis points year over year to 66.7%, and its adjusted net income jumped 83% to $7.9 billion. Analysts expected NVIDIA's revenue and earnings to grow 60% and 74% respectively for the full year. I'm bullish on this stock, especially for November. However, I'm short far out of the money call credit spreads on the stock. You can watch more about spreads and small account trading in my option playlist, so make sure to check them out and don't stop watching now. Thank you for watching, and I'll see you very soon.